We are on day 37, going on a day 38 of our government being shut down. And a lot of our people, a lot of our government employees across the country are not getting paid. But you know who is getting paid? That's right, your congressmen, your senators, your congresswomen. They're getting paid, but air traffic controllers are not. Who should not be getting paid right now? And actually, who's doing their job? That's right, the air traffic controllers. They're doing them for free, as many government service employees are as well. But you know what? Let us see what is going on in the market this week. There's a lot going on. We have some good news coming out. So we'll start off with the big three. Prices, inventory, rates. Prices are steady. We'll talk about that here. We had the Honolulu Board of Realtors report come out. Inventory is steady as well. We'll look at that. And then rates. Rates are kind of where we started the week at as we end the week. Now let's look at the headline news. ADP Jobs Report. So we don't have a BLS Jobs Report this week. We didn't have one this month. We didn't have one last month because of the government shutdown. Last month, the ADP Jobs Report was negative. This month, it was actually a positive report, which is not good for interest rates. So that didn't help us. And that was on Wednesday. Labor market, though, there were some other reports that we don't normally look at. We'll get into those. They showed the market really isn't very good for labor. Honolulu home sales are steady. We got the HBR home sales report for the month of October. And the VA rates stay above 6%. So let's break this all down. Let's start off with the ADP private sector employment report for the week. Private sector, we had a sharp miss to the upside this month. We've been 3 of the last 5 months, we actually had negative job growth. But this month, we actually were at 42,000 for job growth versus the expectation of 24,000 jobs gained. You can see, though, 10,000 down for small, 21,000 down for medium-sized. Small, medium-sized businesses actually saw a decrease in jobs, but large employers actually saw an increase. And when we talk about large employers, we're looking at mostly education and health services, and those are not really sensitive to the economy because we always need health services and we always need education. So really kind of not indicative of really what we're seeing in the labor market. Pay is steady for both job stayers and job movers. No change there. And here's a big thing. This report was important because it shows that if on the surface that employment is solid, and you hear a bunch of the Fed presidents talking about how solid the employment is, but you know what? This report is the only report that the Fed has to look at before their next meeting in December. And if the government does not open, again, let's go back to those people who are getting paid and not doing a damn thing, all right? If we don't get the government open, then guess what? We don't get the BLS jobs report. We don't get the weekly Department of Labor unemployment report. And the Fed is not going to lower the Fed funds rate another quarter point based on just one report. They need to see more data. The Fed has said all along over the last 3 years, they are making their decision based on data. But if the government's not working, guess what? We don't get that data. So really, this report, not a great report for interest rates, but it really doesn't show a super employment report as far as labor across the nation. You know what? If this is all we got, I guarantee you that Fed is not going to lower the Fed funds rate by 25 basis points in December. Fed Chair Powell has said that, and most of the Fed presidents have fallen in line with what Fed Chair Powell is saying. This week, we also had another report that we don't normally look at because we have BLS, the Bureau of Labor Statistics report, which we don't have right now, but we had the Challenger job report. We also had the Chicago Fed Labor Market Indicator report come out. And based on what this labor market indicator report shows, unemployment would have gone from 4.3% up to 4.4%. Still, overall, that's really good. If you go back to the Great Recession, unemployment was at 10%. We're not even close to that. But unemployment going up is still something to factor when you're looking at what the Fed funds rate is and whether or not we're too restrictive. The Fed is too restrictive, and quite frankly, they are. Let's look at the Challenger Jobs report that came out. And whoa, let me tell you what. Let's look at the numbers here. 153,000 job cuts in October. That is the highest October number of job cuts in 22 years. That's right, 22 October is the highest. We have had 1 million job cuts this year to date. That is the highest since 2009. Yes, That was a Great Recession. And then if you look at hiring plans, so we're talking about job cuts, let's talk about hiring plans. Hiring plans are down 35% from this time last year. And year to date, we are at lowest total of hires since 2011. Again, this is right as we were coming out of the Great Recession. So the labor market, despite the ADP report, the labor market is not as good as it may seem. And once we get the government back and it working, we will actually see these numbers, and they will probably show that the Fed is actually, once again, late to the show and late to cutting rates. So what has this meant for the housing market? Well, in Honolulu, the HBR, the Honolulu Board of Realtors report came out just yesterday on Thursday, and it shows that Oahu home sales are steady, and guess what? Condo sales are starting to pick up. Right, you see 1.1625 million for single-family homes, 535,000 median sales price for condos. That is near the all-time high of 540,000 for condos. What? Wait a second. I thought the market was slowing down. Well, guess what? It's all about location, location, location. And I'll tell you what, we are seeing some pretty good numbers. And you know what? If you had any choice on where you're going to live, and trust me, I've been here for 16 years now, you're going to want to live in Hawaii. So let's break down some of these statistics here. All right, month over month. September showed a very strong month, an uptick in sales for condos, slightly down for single-family homes. And we'll get into this breakdown on the single-family homes and how kind of give you an idea why. Median home sales prices were up for single-family homes just a little bit, and a really solid rebound for condos at 5.2% month-over-month gain. Homes stay in a market a little longer for condos at 44 days, but single-family homes were steady at 26 days, which is 10 more. I mean, God, a year ago, single-family, because of the lack of inventory, single-family homes were staying on the market for about 16 days, now up to 26 days. And guess where most of those homes are? Yeah, that's right, they're on the west side. Huge drop in pending home sales for condos, down 21% month over month. That will most likely show in our report for the Honolulu Board of Realtors report for November. Month supply, typical for this time of year, really steady. You don't really see an increase or a decrease in months of supply. There's just not a lot of inventory typically, so we're right about where we expect to be. New listings, all right. We have had 6 months of declines in new listings, and that's pretty normal. And this is the third time in a row where we have had less than 1,000 new listings. Again, pretty normal as we get towards the end of the year. If you look on this chart, pretty much every December you see a huge drop in new listings. So, and that's just happens. People have already put their homes on the market. We have a little more in condos though, slightly, not a lot, but it's something to keep an eye on. New listings coming down is pretty normal for this time of the year. So no real big change there, no real surprises. Let's look at active inventory. We are still near 10-year highs in active inventory. For the 8th month in a row, we are over 3,000 active units listed for sale at 3,116. Condos showed a slight uptick thanks in large part to gains in the metro area, Makakilo, and the Hawaii Kai regions. Hawaii Kai and Kaneohe actually showed the largest increase in inventory, up 51.7% and 20.3% respectively. The condo market, though, was buoyed by large gains in Makakilo and Waipahu, up 186% and 100% compared to last year. What does this say? There's a lot of homes on the market. This bodes very well for buyers. As interest rates have gone up, you will see that this active inventory level is not going to go down. And even when rates go down, folks, you're not going to see the inventory fall off a cliff like we have seen in the past because rates are still pretty high. But you'll see a gradual decrease over time. I still think even 6 months from now, we're still going to be in a buyer's market because there's such a large amount of inventory. And rates aren't going to drop that much. They're going to go steady down, not falling off a cliff going down. So just something to keep an eye on with active inventory, but I expect the active inventory to stay right around the 3,000 mark until the springtime. In the springtime, you see a lot more homes come on the market, and I think we'll see if rates come down, we'll still see right around 3,000 because I just don't think we're going to get that much churn. But we'll still get some movement. But we're not going to see, again, what we saw, 2021 when the inventory fell off a cliff and dropped really from 3,000, near 3,000 down to 1,300. So really a good market for buyers. And we're almost in a healthy market if we get rates down just a little bit more. And let's break down active inventory for single-family homes. If you look at these numbers, we're slim pickings below 1 million, folks. We have less to choose from compared to 2024. And you can see, really, from 700,000 to just under 1 million, there's a decline of 18.9% active inventory of homes from this year compared to last year. And I tell you what, you just drive around Ewa Beach. In my neighborhood, I live in a neighborhood where at one point every home in my neighborhood was over 1 million. Now you have some that are under 1 million, and certainly the ones that were higher they're sitting on the market. We got 5 homes in my neighborhood on the golf course that have sat on the market now for a couple months. So that really shows, you can see, really think anything above 1 to 1.5 million, and they're sitting on the market a little longer. There is opportunity on just about every one of the homes. They are offering some sort of a seller incentive to help you make that home more affordable with your monthly mortgage payment. So really a great market for buyers in that 1 to 1.5 million range. Anything below, you're going to see more competition because there's just less inventory. Again, the law of supply and demand. People want those homes under 1 million. Just not there. All right, let's look at closed sales for the month of October. 704 total closed sales in October. That's the highest since May of 2024. Normally, you see a dip in the fall. I would expect we see a dip in November, especially considering interest rates have gone up. But look at this, though. We did see a condo rebound, and I will say this, insurance rates have gone down, and there are several condo units on island who are lowering their insurance costs, which is allowing the associations to lower the maintenance fees overall altogether. Still kind of high, but still you're seeing some positive move in the insurance and the HOA dues, and as such you're seeing a rebound in condo sales. Single family homes down a little bit in closed sales. Again, I think that's largely because you have so many homes now that are above 1 million, and that's a price point that really hurts some people. So closed sales, not a lot of change there. Median sales price, we've stayed on the same floor. We're still on the same floor for single family homes and for condos. Again, condos are at near all-time highs of 540,000. We're at 535,000 for the median sales price for condos this past month. At some point, though, I tell you, the market is going to break to the upside. Despite high rates, you can see that the median sales price of single-family homes and condos have stayed very steady over the past 3 years. We're just waiting for that time period where interest rates drop and they stay low. And we're not talking in the 3%, we're talking in the 5s. We get into the 5s, the action's going to pick up, and you're going to see homes start flowing off the market again. You're going to see the median sale price tick up to that next level. And let's take a look at VA rates. All right, VA rates are above 6%. They were tracking up. That ADP Jobs Report coming out, that did not help. But guess what? The Challenger Jobs Report that came out on Thursday brought rates back down. The increase in rates on Wednesday with a decrease on Thursday were still right around 6%. Again, and those are not my rates specifically, but those are the rates that you see really on average across the country. So again, what's going to move us down below 6%? Government opening up. That's right. We need the government open. We need to start getting the government reports back out that show, hey, guess what? Unemployment is actually, the labor market is really not that good. We don't have that until the government opens. I think the other big thing coming up is going to be, quite frankly, it's going to be the Supreme Court making their decision on tariffs. I think if they rule negatively, that's not going to bode well for the stock market, which may bode well for mortgage rates, 10-year treasury, but we'll see. But we really need the government to open. We need the government to open so that we can see really where we're at, not just on employment and labor, but also on inflation. Hey, so what does this mean for buyers? Well, I tell you what, if you're in the market right now, I have a lot of clients right now who are looking and they're not getting paid. So they can't really put in an offer. And that's a frustrating thing, not just for the buyers, but for the sellers. The mortgage apps, as a matter of fact, and that reflected in the mortgage applications this last week. They were down 1% for purchases and down 3% for refinances. And quite frankly, this is before rates really went up. So this next week's readings, we might see an even bigger decrease. I know personally, I saw a decrease in applications coming in over this course of time. For buyers, though, if you're in the market and you're getting paid, and even if you're not getting paid, be ready, because as soon as the government opens up, guess what? You're going to be able to take advantage of the situation, because there are people who are afraid to get into the market right now. And guess what? You will have that opportunity to really get a great deal on a home. Sellers, again, stay patient. At this point, I would not put my home on the market until the springtime. Really, when you start seeing PCS season, that's when people start getting ready to move. But that's some people don't have that they can't afford to wait. But personally, I would wait until the springtime to put my home on the market. And that's all I have for you guys this week. Hope you guys have a great weekend. Aloha.